Market momentum plays a huge role in trading, but how do you actually spot it to make sure you're only trading in the right direction? Well, in this video, we're gonna break down an indicator that does exactly that, helping you identify market momentum. So without wasting any time, let's dive right in. First things first, let's add this indicator to our chart. To do that, head over to TradingView, that's the platform I'll be using. If you don't have an account yet, you can find the sign up link in the video description. Next, load up any trading asset you prefer on any time frame. For this example, I'll be using GBP JPY on the 5-minute chart. Now click on indicators and type in Momentum Bias Index. You're looking for the one by Algo Alpha. Big shout out to them. Alright, now that we have our indicator, let's break it down. You'll notice it consists of a red and teal histogram along with a gray dotted oscillator. When the histogram is teal, like this, it signals bullish momentum. But if it shifts to a darker shade of teal, like here, it suggests a weakening trend, which could mean a trend reversal, a pullback, or just a slowdown. On the flip side, when the histogram turns red, like this, it signals bearish momentum. If it darkens, that could mean a bearish trend is fading or might just be a retracement before continuing down. Now, to actually trade using this indicator, we need strong enough market momentum to push the price in our trade's direction. That's where this gray threshold line comes in. If the histogram is above the dotted line, that confirms a strong momentum, and we're good to enter a trade. But if it's below, we stay out. Simple as that. To build a full strategy around this indicator, we need one more tool. Go to the Indicators tab and search for ADX, the Average Directional Index. You'll find it under the Technical section. Once it's added, draw a white horizontal line at the 20 level. To make sure it's exactly at 20, just double click it, go to Coordinates, set the value to 20, and hit OK. Now, if you're not familiar, the ADX or Average Directional Index is a directional indicator. It's right there in the name. It helps determine whether the market is trending. The red ADX line is what we'll be using to confirm trends. If the ADX is above the white line, that means the market is trending, either up or down. But if it's below, that signals a ranging market, meaning no clear trend, so we won't be taking any trades. Next, let's tweak the Momentum Bias Index settings. Go into its settings and disable the bullish and bearish TP signals since we won't be using them. Then click OK. So now that we know that this indicator identifies market momentum, teal for bullish, red for bearish, the next big question is, how do we combine it with the ADX to enter long and short positions? Let me show you how. Before that, I want to introduce you to my trading family at Bybit.
Welcome aboard our crypto arc where dreams meet freedom. Join us on this journey as we empower crypto believers with knowledge and tools to achieve their goals. And guess what? We're just getting started in this world of endless possibilities. Click the link below to join us now. Enjoy 0 fees on spot trading for the first 30 days and a chance to win up to 30,000 USDT in deposit rewards. Join Bybit today and ride the wave of crypto success.
Alright, back to the strategy. Here's a simple example of how to use this indicator for trading. If you're looking to go long, wait for the ADX line to cross above the white 20 level, confirming that the market is trending. Then at the moment of the crossover, check the Momentum Bias Index histogram. If it's bright teal and has closed above the gray dotted oscillator, that's your entry signal. Place your stop loss below the most recent swing low. For take profit, you can go with the risk reward ratio of 1:1, 1:1.5, or even 1:2. Personally, I prefer the mid-range, so I will go with 1:1.5. Now let's look at a short setup. In this case, the ADX line crossed above the white horizontal level, confirming a trending market. Looking at the histogram, we see it's red, signaling bearish momentum. That means the ADX identified trend is bearish, so we take a short trade. Here's another example. The ADX crosses above the white line, and at that moment, the histogram bar closes above the dotted oscillator. Another valid entry. Same thing here. The ADX crosses above, and the histogram confirms a strong bearish momentum, meaning we take the short. Now, not every setup will be a winner. Take this one for example. The ADX crossover happened and the histogram turned green, but the trade ended up losing. And that's totally fine, no strategy wins 100% of the time. Here's another situation where the ADX crossed above, but the histogram didn't close above the dotted oscillator. That means the setup was invalid, so we avoided taking the trade. Same thing with this one. The ADX crossed, but the momentum bias index didn't confirm the move, helping us avoid a bad trade. But here we had a valid trade. The ADX crossed the white line, and at the same time the histogram was bright teal and closed above the dotted oscillator. And again, here's another winning setup with the same conditions. You could keep spotting setups like this over and over again. But remember, this is purely a technical strategy. That means it won't always be profitable because markets change over time. To improve a strategy like this, consider adding price action or smart money concepts to filter out bad trades. And to do that, I highly recommend to check out the recommended videos on your screen, plus the ones which I showed you before, how to turn any trading strategy into a bot with alerts, all for free. And of course, always do extensive backtesting before trading with real money. That's gonna wrap up this video. Hopefully you found it useful. If you did, make sure to hit that like button and subscribe for more content. And if you have any questions about this strategy, drop them in the comments below. Thanks for watching, see you in the next one.